Hey everyone, Market Mondays here. Denny Troncoso. Gonna go over some great information today. I have found an article that I've had some conversations with other investors and friends of mine. And is the market gonna crash? Is it gonna crash? Well, there's an article from bankrate.com that's gonna talk all about it. And after that, we'll go over interest rates. We'll go over residential, commercial, and SBA interest rates. And I've had people talk to me about market crashing since 2008, 09. And I know we're anticipating that we want to get better real estate investment opportunities. And that's why people, want to wait on crashing. But, it's been 15 years. Is it going to crash now? Well, let's go over. I'm going to go ahead and share my screen with you. And then we can go over that today. Let's see here. Let's see. All right, so is the housing market going to crash? And then let me see here. Boom, and that's me. Is the market going to crash? Well, I don't know. The first thing it says, this is bankrate.com by Jeff Ostrowski. I actually really enjoyed the article. Good information on here. It says the first thing was inventories have been growing, but remain frustratingly tight with NAR, the National Association of Realtors June data showing a 4.1 month supply of homes on the market. So I've actually shared in other videos about the difference between a buyer's and a seller's market. And a seller's market is, a balanced market is about 6 months of supply. And then a seller's market is less than 6 months, and a buyer's market is more than 6 months. So think about it. If every month there was a home that sold and there's 6 houses on the market, right? So there's 6 houses on the market. So that would be a balanced market. So it would take 6 months to sell all of the houses. Now, if there's only 3 houses on the market and one house is sell every month, the house sells every month, then in 3 months, all the houses would be gone. That's actually a seller's market. So that means the sellers would have more negotiating power. Houses would sell faster, right? Because there's a lot of people only trying to get those 3 houses. And sellers won't have to lower their price. They're probably going to get top dollar over asking price. They won't have to renovate their homes, etc. Now, in the opposite, if there were 9 houses on the market and a house sells every month, then we are in a buyer's market. And that means the buyers have more negotiating power. Buyers have more time to look at homes. They don't have to make an offer right away. They don't have to rush. They can look at the home. They can think about it, digest. They can look at other homes. And they could ask for closing costs. They could, take longer for inspection. So yada, yada. Tons of stuff they can do. Now we're in a 4.1 month supply, meaning it's still a seller's market, but it's better than what it was. We were in the 3 month supply of homes, and now it's actually in the 4. So it's actually moving toward more of a balanced market, and it's actually the best thing to be. You don't want it to be too seller or too buyer. Now, prices will remain firm, but will not decline on a national level. And this is from Lawrence Yun, chief economist for the National Association of Realtors. I know in some places there have been some declines in prices, but overall, throughout the country, United States, they don't expect a big decline in homes. The next one, many would-be buyers have been waiting for rates to drop. That's another thing. A lot of buyers have been waiting for rates to drop. But if mortgage rates do decline meaningfully, it could send new buyers flooding into the market, pushing up home prices. And that's something I mentioned in other videos. That's my opinion of it. I don't believe that waiting for rates to drop, if you can purchase now, and I know a lot of people can't, right? Because maybe it's just unaffordable for you. But if you can purchase now and then you can, you maintain this, you're able to make the payments now. If rates drop in the future, then you can just go ahead and streamline into a lower rate. There's a VA streamline, a FHA streamline, which saves money on time and closing costs. But that's, again, if you can afford it. The next one is the nationwide median sales price in June, and I'm trying to kind of scroll down here for you so you can see it. It talked about existing home sales fell 5.4% in May to June, and also from June to 2020 to June 2024. So sales fell, but prices actually did. It says the nationwide median sales price was 426,900. NAR says that's the second all-time high in a row, the highest median NAR has ever recorded. So the median is half of the homes are above that sold, half of the homes are below that the price wise, and we're right in the middle. And this is the median sales price. That's the highest it's ever been. and which is significant, right? 426 prices. Now, the next one is foreclosure filings. A total of 18,000 US homes had foreclosure filings, default notices, scheduled auctions, or bank repossessions in June 2024, according to the latest numbers, right? So that's a lot. However, that's down about 23% year over year. So that means in 2023, there were 23% more foreclosures than there are now. It's actually trending downward, right? So if that's actually a positive. So that means that we don't expect that that could get worse, and that at least on the residential side, and thus leading to a collapse in the market. That's what the experts say, and that's actually what I support. So, but they have some really good points here. All right, so here's another one. It's talking about right down here. One obvious difference between now and then is that homeowners' personal balance sheets are much stronger today than they were 15 years ago. The typical homeowner with a mortgage has stellar credit, a ton of home equity, and a fixed mortgage locked in at a low rate. In fact, New York Times said from April, found that at the end of 2023, around 70% of U.S. mortgage holders were locked in at rates more than 3 percentage points below the current market rate at the time. So that means if the rates were 7, most people, 70% were below 4%. It's hard to sell a home and jump into a higher rate if you're at a 4% rate. Maybe even unaffordable for certain people. So that's pushing, keeping supply low, and thus demand high, right? Because there's not a lot of homes on the market. There's not a lot of supply that would push prices down. All right, so what's the next one? It says, after posting a year-over-year decrease in February 2023, for the first time in more than a decade, the median sales price of single-family homes has been on the rise again, recording an annual growth for 12 months in a row, reaching the highest price ever recorded. That's what I said in June, right? So prices are going up, right? That was there. All right, so 5 points why a crash is not imminent. Number one, inventories are still too low, guys. 4.1 month supply is not enough to push a crash, put us over the cliff. I talked about 4.1 month supply. Number two, builders aren't building quickly enough to meet demand. Land and approval takes time. We are working on a project, our first development, and we own a piece of land, 35 acres. We're looking to get approved. The planning, 6 months to a year. Going through approvals, close to a year because of the size of the project. And then we're talking about construction. So we're talking about a 2-3 year development project. It actually works out well because right now we're in a bit of a sticky situation with the commercial real estate space. But imagine builders trying to do that and bringing new supply on the market to be able to, take advantage of all the demand that they have. They can't even meet the demand, even if they wanted to, and they're trying. Number three, demographic trends are creating new buyers. Millennials are a huge group and are in their prime buying years. So millennials they had a lot of challenges with the first Great Recession, finding jobs. Then the pandemic was a big one. And then, of course, student loans, right? So student loan debt actually has been a big thing because a lot of the subsidies, a lot of the tuition prices increased in the early 2000s and the mid 2000s and after 2010 in a lot of even public universities. And that's hurt a lot of millennials from buying a home. But now they're in their prime earning years, so they want to buy a home. So there's going to be a lot of demand, and being the largest demographic. So before that, the largest demographic were baby boomers, but the largest demographic now is our millennials. Those are people born between 1980 to about 1996 or 2000, depending who you speak with. The other big demand driver is Hispanics. Hispanics are going to be buying homes. They're going to be the largest demographic to be buying homes. About 53% is expected. So they're over half of home buyers will be Hispanic. Number four, lending standards are strict. In 2007, liar loans. They call them liars. I used to call them ninja loans, which is no income, no job. These are, if you were a dog and you fill out a loan application, you could have got a loan. That's not so easy anymore. You have to have credit. You have to have income. Even for investment loans, your credit needs to be there to be able to buy investment property. It's not impossible, but it's harder than it was back then. Number five, foreclosure activity is muted. I've already mentioned that. It was 18,000 in June, but that's over the last 12 months. believe it was what it said. And it's actually, it's trending downward, like 23% less. So according to the experts, nobody knows for sure. Nobody, everybody tries to be a projector, look at the fortune, that their fortune, nobody knows. But the likelihood is not, it's not likely to be a big collapse unless something big happens. So if you're waiting on that, I would be cautious, right? But that's up to your decision to make, right? Because we're here to educate, and then you decide. All right, so now let's go ahead, and I'm going to share another screen here with you so you can see. All right, so here were our interest rates today, and I just have a little example. $500,000 purchase price, $400,000 loan amount, taxes are $5,000, insurance is $2,000, income for the buyer, family income $10,000. I put no personal debt, that may be different from everyone. 30-year term, no prepayment penalty, fixed rate, right? So this is not anything variable or anything. 2% origination fee. There's two options with the origination fee. I mentioned before, you can do lender paid, you can do borrower paid. I put borrower paid so you get the lowest rate. I know there's some people that say, oh no, you don't have any origination fee with me, but you're actually paying a higher rate, but we can, work it however you'd like. So this one is to get the lowest rate possible, right? $3,013.78 would be the monthly payment. That includes principal, tax, insurance, and your taxes. What's the rate? 6.125%, right? Rates went down significantly. They're in the low sixes, and they're trending downward. So it's a really good time to get into the process of buying, and we're going into the fall soon. It's so hot in Florida. We got to get into the fall and then the end of the year, and that's really a really good time to buy because there's not that many buyers. So summer selling season, a lot of demand for homes. Later in the year, it actually goes down. So if you're looking to buy, maybe a good time to jump in. Give me a shout. Love to help. All right, APR 6.60%. Commercial real estate. If you're looking to buy commercial, looking to refinance, 5-year rate, typically commercial, it's a 5-year rate, can go longer, 7, 10, can go shorter, but 5 is typical, about 6% right now, 6.05%. And then SBA loans, purchasing a business, refinancing, getting a new loan, franchises, 7A over 350,000, it's 11.5%. It is variable because this is our SBA loans. These are the way that they are. But for businesses, there's a lot more cash flow to pay for that. All right. Okay. So here we go. And if you found the show, you like what we're talking about, you find it beneficial, please go ahead and share it with five friends, 10 friends. Tell them about the show. Tell them about the information we're providing, finance information. You're getting ready to share some good investment information as well. If you haven't subscribed yet, click the subscribe button. It's easy. Just press the subscribe button. It helps, keeps us motivated, helps people find the show. The next one is for the algorithm, go ahead and comment. Say, hey, Denny, I love that you covered this. This was really helpful. I would love to learn more about this. Let me know. And if we can do business, if I can help you in any way, and have tons of stuff there. First-time home buyer course, how to set up an appointment if you're looking to buy a home. We can get on the home path. Or even on the investment path, if that's something else you're looking at. All right, guys. So until then, I'll talk to you soon. Market Mondays, Denny Troncoso.